Welcome back, and it has been yet another choppy day where we have seen some stability finally come back as the yuan, which declined to an 11-year low yesterday, did find some feet. Even as the Central Bank of China did put the reference rate slightly on the higher side, the offshore yuan trading was still happening at very weaker levels there. Near record lows is what we checked while the Chinese markets were still open. But that really has had a lot of impact on the gold prices, where we saw 6-year highs in COMEX and all-time highs in the Indian markets, in Canada, in Japan, and also in UK. The gold prices have hit an all-time high until now. From here on, what is the outlook looking like, and where are we headed on? David Ferguson, chairman of Global Precious Metals, now joins us on a phone line. David, hi, good to have you. What a run-up that we've seen in gold prices as the month of August has begun, and this would be perhaps a fourth straight month where we started on gains. What is your sense after hitting the kind of highs that we've seen? Where are the gold prices headed?
Well, look, Manisha, I mean, I've been actually quite surprised by the ongoing strength in the gold price, and it has been a bit of a perfect storm that has led to this. I mean, we've seen geopolitical problems in Iran, trade war issues in China. I mean, all of these sort of issues have really pushed, the demand for gold up. Against that backdrop, you've also seen fairly difficult, a fairly difficult monetary environment for anyone who likes hard money, in the sense that it looks like we've reached the peak in interest rates across most of the major currency blocks, and that's happening at an interest rate which has been negative on a real basis, and that, of course, is incredibly supportive for gold. So we've had a number of things that have pushed gold up through key resistance levels. I mean, I frankly thought gold was going to trade up to about the 1400 level, a bit over, maybe up to 1420, and then trade down to the late 1300s again, and then sort of hold there at that level before moving constructively through that up until the all-time highs in dollar terms. But we've moved through that point convincingly now. So while I don't think we're going to go straight up, I think we are now comfortably into a gold bull market. I think any downside risks from here, will stop at the resistance levels at around the 1420 mark, and realistically, you've got a very asymmetric trade in gold, in dollars, right?
Yeah.
So, on the basis that I still think the dollar, in any sense of economic sort of turbulence that I think we're clearly going into, is going to be a strong currency. Gold is going to be even stronger than that. So, when you're basing your decisions in sterling or euros or rupees or rupiah or yen or any other currency, then gold is something that is looking very good indeed.
I take your point, David, when you say that the gold prices, the run-up has been very strong and backed by money as well, because the ETF buying has been stronger. And yes, with the kind of global growth concerns and the currency wars that we are looking at right now, where many of the other countries perhaps will want to see their currencies, would not mind their currencies devaluing, because that would really push exports and global trade. But with that kind of a scenario, what is your sense from here? What kind of gains are you expecting in this year, in the next year, and do you see this strength continue?
Oh yeah, look, I think we're going to see all-time highs in the gold price in US dollars. I would say it'll take us a couple of years to get there, unless we have an economic collapse or an economic crisis of some form or other, and or a sharp pickup in inflation across the board. Because the one thing that's becoming clear to people and this is, again, we always have to separate India from the rest of the world in this, because Indians already know that the best, a very good store of value for the long term is gold. The rest of the world has forgotten that and needs to relearn it. But as we see, people sort of relearning the fact that they would be significantly better off owning, gold rather than pound sterling, for example, you are going to see that wall of money re-enter the gold market, and that's going to underpin continued strength in the price. It has to. There's no alternative, and you have to appreciate how bad it's been for for people in the Western world. So people in India who, the women who buy their bangles and wear their bangles, and keep their sort of savings safe on that basis. I mean, one has to remember that 100 years ago, and it's almost 100 years ago exactly, the sovereign ended up, stopped being a pound, and a sovereign is about a quarter of an ounce. It's a little bit less, but it's about a quarter of an ounce.
Yes.
At the end of the day, that sovereign today is going to cost you £280. So £1 to 280, that's a lot of loss in value.
Oh, absolutely. I totally agree with you. When it comes to retail buying in case of gold, I think India still tops that. And even as China would be a largest consumer of gold right now, the holdings are not so much in retail. So in that sense, yes, India is quite hedged when you look at the individual holding there. Thank you so much, David, for joining us and giving us that sense. Joining us also now is Prathamesh Malya of Angel. Prathamesh, hi. What is your sense on gold now? I mean, everybody that we've been speaking on has been very bullish on gold. Do you hold that view for slightly longer term, I'm assuming?
I think, Manisha, the mixture for gold prices rising is already there. You see U.S. Central Bank in easing mode, ECB in easing mode, tensions in India, and geopolitical tensions across some few nations are clearly building in risk premium for gold prices. But then if you really had to play gold at these levels, I think there's a note of caution attached, because a lot of volatility would be expected as far as price gain or momentum is concerned. But then I would be possibly on the safer side, because I would go with the momentum and I would be buyer in both gold as well as silver. Immediate level that as far as M6 price goes, I think 37,300 is what we're looking at as far as gold is concerned, while silver we are looking at around 42,700, so it should be buy in both these precious metals.
Prathamesh, comment on the crude oil prices also, because that continues to be very choppy. We saw 3% decline yesterday. It opened 1% higher in Asia, and we've seen it giving up some gains right now. How do you look at this very confused trades that we are looking in for this sector?
I think, Manisha, whenever you talk about uncertainty, U.S. and China are already there in the mixture. But then you have to accept the fact that crude prices would possibly not have that kind of momentum, wherein all the central banks are possibly in easy monetary mode. But then going by the momentum, I would again be buyer in crude. And as far as M6 price goes, we are looking at close to around 3,980 mark. But then yes, again, not for a longer term perspective, you would possibly see correction in oil prices very soon.
Okay, so buying crude on those dips today is what Prathamesh is doing. Prathamesh, thank you so much for joining us and giving us those strategies. With that, time up on this show. Thank you for watching.